All right, we are live. Welcome back to Bitcoin.com's The Weekly. I'm Graham Stone, joined as usual by Bitcoin.com News's David Sencil. How you doing, sir?
I'm doing pretty well, surprisingly well, given the things that have happened, um, which we're going to get into. But
Yeah.
the reason I'm doing well is I didn't have any leverage at all anywhere. So you know,
Congratulations. You missed the move.
yeah, I missed out on losing all my money.
Yeah. All right, let's get into it. We have the biggest liquidation in crypto history. For context, the COVID crash supposedly was around $1.2 billion in liquidations. The FTX crash, 1.6 billion. And this one, the one that happened over the weekend, one number that's being reported is $19 billion in liquidations. So 10x the previous records. But there's also another number floating around from CoinGlass, which is estimating 300 billion to 400 billion in liquidations. Um,
I don't even know
Bitcoin,
how that's possible.
not sure how that's possible, but Bitcoin obviously crashed as low as 101, $102,000 before bouncing back to around 110 and then sort of stabilizing there over the weekend, and now is currently rallying close to 116K right now. So yeah, alt Bitcoin held up, I guess, surprisingly well. Sort of, you call that a dip? Uh, what's it like? Okay, yeah, $1 trillion in market cap was lost, but it's only $20,000 in price.
Yeah,
Only, yeah,
this shows you though too, like what we've been talking about all year, not just us but everybody. Who's buying Bitcoin? Who's the marginal buyer? And it's not people who are on perp dexes and like longing it in derivatives, right? Institutions are buying it, so
yeah,
less likely to sell, right? And this
yeah.
is kind of
The
proof of that, I
real
would say.
Yes, the real carnage was in the altcoin market. So, of the top 100 tokens, the blue chip tokens, like 80% of them, or most of them, nuked like 80%. So, at Atom, as an example, ATOM went from $4 to a fraction of a cent in minutes. Sui from $3.40 to 56 cents. Aptos from 5 to 75 cents, $5 to 75 cents. Say dropped from 28 cents to 7 cents. Link from $22 to $8. ADA Cardano's token from 8 cents to 3 cents. Chaos.
No
Now,
liquidity, no
no look.
liquidity in these alts, man, at all.
Yeah. Now, what happened? Let's see if I can bring this up here. So, all right, we had Donald Trump tweeted something on Friday evening, U.S. time, I believe, just before the markets closed. Something about imposing 100% tariffs on China starting November 1st. And this, people are saying this is the trigger for this liquidation cascade. But there's more to that, which we're going to get into it. And not long ago, Trump then tweeted again. He truthed. So first, here's the original one. It has just been learned that China has taken an extraordinarily aggressive position on trade. And then just a few hours ago, we have another one. Don't worry about China. It will all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The USA wants to help China not to hurt it. So, I mean, that sparked some confidence perhaps back in the market, which is why we're seeing this bounce or rally.
Well,
So that's the big picture, perhaps.
Graham, I would just say that if you wanted to nitpick a little bit, you could say maybe the start of this was the day before Thursday when China announced these like kind of draconian rare earth metal, I don't know, bans or kind of filtration program, like basically who gets these rare earth metals, and Trump's subsequent post was retaliating to that. So maybe you could say China kicked this off by starting some rare earth metal thing. Now, since then, so you have China starting that on Thursday, Trump doing the tariff thing Friday. I think the news I saw this morning is that China has walked back their rare earth metal ban. They said, "Oh, people didn't understand what we were talking about. Of course, everyone can get rare earth metals. We're now just going to be kind of more selective and methodical in our process of how we kind of allot these things." So it's almost like a tit
Okay.
for tat between the U.S. and China. It seems.
All right. Now, going down the conspiracy theory rabbit hole just for a moment, there was a lot of talk about this one colossal BTC whale who basically shorted right at the peak. And then just minutes before Trump's tweet, Trump's truth, this whale on Hyperliquid piled on millions more in shorts. And then at the very pico bottom of the drop, he closed 90% of his Bitcoin short and completely exited his Ethereum short, supposedly pocketing around $200 million from that trade. So a lot of people are saying, okay, well, this guy knew something. But then I've heard other commentators saying, talking heads saying, no, this was sort of known, right? As you mentioned, David, that China had talked about this thing before, the rare earth. So this whale could have been like, okay, I expect the market to crash. I expect Trump to come out with some inflammatory tweet which will trigger the crash. And it just so happened that this guy managed to put on, like, double down on his short, like literally minutes before Trump's tweet.
Yeah, I mean, there's so many fascinating parts of this, and I can't wait to dig more into all these different pieces of the story as reporting comes out over time from various sources. But you also have these angles. So I heard another angle to this, which is because this was on Hyperliquid, and other traders like very big traders who've been trading crypto for a long time. They were like, "You think that this was unique to Hyperliquid? You think that there was just one like, well, it's like the only reason that you're talking about this Hyperliquid guy, like he was the whale, is because
Yeah.
it's transparent." And
Yeah.
and they were like, we're in the order books and all the sexes and stuff, and this kind of stuff is like pretty normal. It's just
Yeah.
that
Not to
you
mention the
can't.
TradFi markets,
Yeah, it's like
just
you
like normal
can't see it.
stocks. Yeah.
Yeah, so you
Yeah.
can't see it, and so now this appears kind of, I don't know, special or conspiratorial.
Or
Uh,
it appears like crypto's rigged. A lot of people are coming out saying crypto's rigged. It's a rigged game. But Eric Voorhees had a tweet which is like, no, that's a
I
bad
saw that
take.
one. Yeah.
What is happening here is exactly what you're saying, David. It's just like we can actually see it now. We can actually see the manipulation or like the insider trading.
The the other
If that's what
interesting
it is.
thing, yes, the other interesting thing is, again, crypto. I mean, I guess everywhere you go, every kind of aspect of online culture is so tribal, and so you get these people who are like, perp dexes are evil because of this whale and things like that, and then the people who support perp dexes are like, no, you're crazy. It's this, sexes do it too, and then like people who work for centralized exchanges or are in those ecosystems are pushing back, saying, no, we were able to handle this better than you. We'll get into some reasons later, but you get these kind of like just secondary tribal
Yeah.
fights
Yeah.
about this whole thing. Pretty wild.
So, David, we've got our perp dexes to blame in the title of our live stream here, and yeah, what's your definitive answer there, David?
Definitive answer. Honestly, they're probably partially to blame. The dexes maybe themselves, but also just the thing that they've introduced to crypto. So a little bit, right? I tend to think of this when I saw it in the morning. I saw it and I saw what happened. I saw how Bitcoin reacted. I saw how the alts reacted, and I was like, "Oh, this just seems kind of not fake, like but it seems like it just seemed like leverage built up, basically, right? Like it wasn't like an FTX style collapse or like a COVID collapse, which had kind of exogenous elements to it. This seemed like basically not a manufactured situation, but again, the markets seem pretty healthy. We're in a bull market, so anyway,
Yeah,
perp
I mean,
dexes.
well, okay,
Go ahead.
before you go
Go
into
ahead.
that, yeah, just like with this, the fallout I saw there's been tons of tweets of people sort of rage quitting, and and you're just like, what? You lost your entire position. You know, if these tweets can be believed, or if they're not just like pity seeking or whatever, but like you lost your
Engagement
entire
farming.
position, engagement farming, yeah, because you were like what 50x leverage with a $30 million position, and the market moved like sorry, but I don't know. I guess I don't. Anyways, there supposedly on Hyperliquid there were over 1,000 traders who are down $100,000 from this, and 206 traders that are down $1 million. They lost $1 million. 358 of those accounts lost everything, zero balance, including one person who supposedly lost $19 million in their account on Hyperliquid.
Now, I would bet you money that those numbers are going to be much higher on Binance and Bybit, right?
We just
and
don't have the
Upbit.
numbers yet. Yeah.
They're not going to release them
We never
probably,
get. We're never gonna
right?
have
Like,
them. Yeah.
yeah. Why would Binance release like, hey, here's all the losers on our
Exactly.
platform, right? Not great advertising for them. So anyway, so are perp dexes to blame? I would say partially yes, and I think there are a couple good reasons. The first we talked about a little bit, which is we're kind of in the, I would say, the tail end, or maybe in some kind of middle resting period of the perp dex meta, the perp dex narrative, and it's all about farming. You gotta airdrop farm the perp dexes, and the way you do this is basically you create positions on the platform, right? To build up points so you can get the airdrop, Hyperliquid style. And I think this has basically created a lot of fair weather derivative traders who wouldn't otherwise be doing this, right? And that means that they don't really know what they're doing and they don't really care that much. But basically, you've just seen probably this massive influx of what I would call idiots uh, derivative trading. And I was one of those people like a cycle ago, and that's why I stopped because I'm just not good at it. I am a derivatives idiot. So anyway, you've seen this massive flux of I would say like crypto native ish traders on these perp dexes. They don't have to KYC or anything like that. Just get in, and leverage is a hell of a drug. And so then that builds up this kind of leverage in the system, right? So then when you have some event, some trigger, let's say it's Trump or whatever it is, you can get this cascade down. So that'd
Yeah.
be one, and I think that probably is true, right? Like you've seen a massive influx of stupid leverage.
Yeah. So even without this trigger, the markets were sort of on a knife edge, ready for a severe correction. And as we've talked about, we're heading into like Q4. It's going to be probably the volatility quarter, big moves up and down. So yeah, maybe maybe don't do 100x leverage maybe
Yeah.
during this
Well, I
period.
mean, you saw like I saw some accounts saying like they did a 2x or 3x leverage, but again, if you 2x or 3x leverage on like Atom,
Yeah,
right, which went down
you're
to
done.
zero, you're done. You're
Yeah.
done.
Yeah, you
So
could get
again,
away with that. You could have got away with that on Bitcoin, of course. It only went
yes,
down like 10%, so you would have been fine with 2, 3 you wouldn't have been fine maybe with 10x leverage,
Yeah.
but you would have been fine up to at least 5.
Yeah. So so that's one. And then the other is that the perp dexes are, again, I'm not apologizing for perp dexes, but you see this in crypto a lot. You have a new product and there's going to be lots of problems as they work out the various like kind of what do they call them?
Edge cases.
Edge cases, yeah, like these kind of like long tail things that just don't normally happen. And so perp dexes don't usually have insurance funds to kind of step in and backstop the liquidity of the perp dex itself, of the exchange itself. So like under times of stress like this, the exchange has to make sure that it remains solvent, right? That's really really important. So you get this ADL, auto deleveraging thing happening on perp dexes. They don't use insurance funds. They do this ADL thing, which basically means that as the exchange, as far as I know, in this very stupid, simple way, as the exchange gets under stress, liquidity becomes difficult. You start to see like gapping down and stuff like that. The the exchange just starts to liquidate everybody, right? People who are positive and negative. And sorry, this can cause all kinds of problems. One more. And so ADL has kind of become a what, like a bad word, I would say, Graham.
Yeah, it's like the maybe the word of the month here. Maybe it's going to be the word of the month,
Graham,
ADL.
do you have some traders in the background that are crying about their losses? I think I hear.
Can you hear that? Bit of a meltdown over here. I don't think it's market related.
I thought I heard someone say, "Don't ADL me, bro," in the background. Anyway, so yeah. So the way perp dexes handle the liquidations are not as graceful, I would say, as the centralized exchanges. That could be the case. Now, again, we have to wait a little more time to get, I think, more methodical, data driven analysis on this. But that could also be the issue. And so yeah, I do think perp dexes probably were very important to this particular event. Um, yeah. Now, this is not to say that centralized exchanges had no part to play in at all. Of course not. Right? They
Yeah,
they had a lot of leverage too, and then they also liquidated a bunch of people, and so then you would see gapping down, and I think we're going to get to this next. But I don't
yeah.
know if you have anything
Let's
to
talk
say.
about the USDE DPEG. With that, everyone was calling it a DPEG, but it's not. It seems that it wasn't actually a DPEG. So this is Athena's US dollar, synthetic dollar, only really DPEG'd on Binance.
Yeah. So there's an interesting, like, I don't know, syntactical question I can ask you at the end. I already know your answer, which is going to be I don't really care. But the way this works is so on Binance, there's a USDE, the Athena stablecoin, USDE, USDC pair, right? And this depegged on Binance. Hasib Koresh, friend of the podcast, he had a great thread. I highly encourage everyone to read this thread because it's good. Now, again, you should be aware, as I was when I started reading this, that Dragonfly are investors in Athena, so he definitely has reasons to defend what happened. But it wasn't just him; lots of people, other accounts were talking about this. But basically, you had on Binance the USDE USDC pair have a massive spike down. I think it went as low as like 60 something cents. The USDE 60 something cents to USDC, which is huge for a stable coin, right? Now, everywhere else you had I think at most like 2 or 3% change. So like 90, I think it got as low as like 95 or 90 something like that on other exchanges, Bybit,
Centralized
for example,
exchanges, yeah.
centralized exchanges. And but on the none of the centralized exchanges are where the vast majority of USDE's liquidity is, right? So the primary venue for USDE is Curve. Okay, Curve has hundreds of millions of dollars in liquidity for USDE. Uh, that might not mean anything to you, but Binance has tens of millions. Bybit has tens of millions. So you're talking about an order of magnitude difference in liquidity, right? So the primary venue is on-chain DeFi. Now, so that's one issue, which is under periods of stress, you'd expect these centralized exchanges or any venue that doesn't have as deep liquidity um, to perform worse, and they all did. Bybit and all of them did. I think Curve did very, very, very well with this, moving 9 figures of volume during this amount of time. 9 figures of volume, really without fuss. Okay,
That's a lot of
so
figures.
that's a lot of figures. The other issue though that Binance had is this Oracle issue, and it's so interesting, Graham, because over this year, I swear, so many of these exchange problems, mostly on Perp DEXs, have been like Oracle related. But here it is on a centralized exchange. You still have Oracle problems. So Binance's Oracle design on this particular pair is different than on others, apparently. Um, so their Oracle, Binance's Oracle for the USDE USDC pair, it it determines the price only from its own data. So it only looks at the
What it's trading at on Binance.
what it's trading at on Binance and like the amount of liquidity on either side of the pair.
Yeah.
But you apparently it's just really it's just how to say this politely. Nobody designs oracles like this. It's like a pretty basic mistake apparently. If you are not the primary venue, you always your oracle always primarily looks at the main venue
Yeah.
to check the price,
Yeah.
which makes a lot of sense, right? Like because because again you have an order of magnitude less liquidity. You need to check to make sure that there's no like nothing's getting messed with, right?
Yeah.
So anyway,
People weren't able to arb uh, to get in and out, like to move funds between Binance and Curve in time to like correct this market dislocation on Binance.
yeah. So, but I mean, it's even on a more simple level, just in terms of basic Oracle design. Your Oracle needs to look at the place that has the most liquidity as the kind of center of gravity, as like the place of truth. And the fact that Binance didn't is just wrong. Just you don't do that. Anyway, then as you're pointing out, Binance obviously big exchange. They were getting hit. Apparently, their APIs were just like not returning. What's it called? Messages back and forth. And this is the last issue. Binance is not a what do they call it? Primary dealer, which means that market makers can't mint USDE on the exchange, right? So they have to do the arb that you're talking about, move funds out of Binance and then move USDE into Binance. On Bybit and all the other bigger exchanges, they are primary dealers of Athena, and so they were able to just mint USDE on the exchange itself, and that's why they didn't have this problem, right? So then you had these three things that really kind of made Binance have a
Now
massive
with
DPEG.
with yeah, with the massive depeg of USDE on Binance, people were using USDE in cross or ice. What is it? Cross margin accounts. So that's where you have multiple assets as your collateral on your derivatives, on your longs and shorts. And with that depeg, it sort of caused your collateral to be worth less, which caused like a large amount of liquidations that were kind of wrong. And I think Binance has said they're looking at compensating people for this.
They already have 200 million thus far.
Okay.
Right. So they've already done that, which is basically is tantamount to admitting culpability. Right. They've already like reimbursed apparently 200 and something million.
All right.
Again, this is not to smash Binance at all, because again, I remember Hyperliquid had that Jelly Oracle problem. These kinds of things happen all the time. Oh, Bybit did as well earlier this year. So again, just from a nerdy kind of design perspective, it's quite interesting to see these crazy things that happen under stress, and how design decisions or like forgetfulness can cause like major problems, right?
Yeah. All right. Let's talk about the aftermath and the implications of this event. So we've already discussed. I mean, one thing is, yeah, Bitcoin held up quite well. You had 278 billion. Joe Consorti writes 278 billion in total was wiped from BTC in 45 minutes, the largest flash crash in history, and that didn't even cause Bitcoin to break below 100K. And currently we're just like 5% down from the crash. So Bitcoin showing resilience here, perhaps an indication of its position in the market and its strength. So maybe that's one thing to point out here as to what this all means.
Yeah, I think that this is gonna, at least in the short term, I would guess that you're gonna see Bitcoin dominance kind of surge here a little bit, right? Just on the narrative that Bitcoin didn't really flinch at this, and then alts got absolutely murdered. And so, if there was any kind of like altcoin season, or like dominance maybe looking like it was going to leg down, I imagine this is going to give fuel for Bitcoin to run here a little bit. And everybody's waiting for the U.S. Open, right? U.S. equities open, because I think you might see, a lot of like TradFi buy Bitcoin even at this kind of like 5% off price, right? Like there's no reason really for Bitcoin to have gone down. And so you're like, oh, if you're a TradFi person, let me buy a bunch of Bitcoin now.
Yeah, actually, gold did sell off slightly, but very little, and it's back trading up above $4,000 again. And on the Bitcoin dominance question, we saw a spike up to almost 64%. It's since come back down to around 60%. So people reallocating to alts.
Yeah, I mean, I thought there was a really good Kobe tweet. I don't know if you saw that.
I think I did.
Did you? And I think that maybe in the short term this will happen. I mean, as markets get heated, they won't. But like just this kind of like you'll see you'll see strong alts. So you'll see Bitcoin do really well, like I just said. But then like you'll see strong alts, the alts that have had like more enduring narratives. I think they'll also do really well, and then everything else is going to flounder. I imagine for the next I don't know how long, for a while though.
Yeah. All right.
Then the
Anything else
last
to
thing
bring up
is
here? Yeah.
yeah. So Gainsey, I don't. Yeah, you know Gainsey. I don't know if
Yeah.
everyone on here knows Gainsey, but he's a legendary CT account. Zoomers don't really know who he is, which is hilarious. He was a trader, shit poster. He was semi-retired, and then he lost a lot of money. Apparently, not enough to make him poor or anything like that. Still like seven figures or whatever. But he's now on Pump.Fun doing a lot of streaming. Anyway, he said he if all these KOLs that you see on the timeline really are destitute now, crypto destitute, they are going to be looking for work, KOL style, right? So, streaming, getting sponsorships, trying to use their following and their audience, monetizing that attention. So specifically, he said that he thinks like Pump.Fun will do well because of the streaming component as KOLs shift over that. Maybe I could see that. But I also think that you'll see a lot of like, I don't know, sponsorship and ref links and things of that nature come out. We've already seen a couple. I'm not going to out anybody, but already today on the timeline, it was weird to see like almost the same exact copy on several accounts that I follow release, and they were promoting uh, the same product. I'm like, huh, that's interesting. So I imagine that you'll see this as these accounts, these KOL accounts, um, try to grow back from all these losses.
Yeah. All right. I think that pretty much covers our historic market crash coverage here. Normally we'd have more stories for the week, but I think we need to mention the Poly market, the ICE investment in Poly market. So this is because this is huge, right? So a few days ago, it was revealed that ICE, which is the company behind the New York Stock Exchange, the parent company of the New York Stock Exchange, put $2 billion into Poly market, valuing the company at $10 billion, I believe. Yes, valuing the company at $10 billion. This is the largest, one of the largest investments by a TradFi institution in a crypto native company. Now, it's quite interesting because, like ICE, obviously, it's a stock exchange. Um, what this acquisition or this investment means, not acquisition, this investment means, right, is that the TradFi markets, they're looking at ways to integrate the data that platforms like Polymarket are providing for traders. Um, I think it signals quite a big shift. I think it's incredibly bullish actually for the whole Web3 ecosystem. That this investment.
Yeah. Also, I was an early user of Polymarket, and I was really pushing it like when they had just like millions of dollars in liquidity for the entire platform. So it's awesome. I think they've done a great job, and I think you're going to see prediction markets become more and more important. And Polymarket was by far and away the best prediction market, especially in those early days. I don't know if you remember that, but like Augur,
Yeah.
I think there was
Well,
like
Augur and the other one, they didn't gain any traction because they didn't have U.S. dollar markets. I
yeah,
think that was the main thing that Polymarket innovated on.
but
You
also it was
can't
just
have a
easy.
prediction market with, yeah, of course, easier. And it was on Polygon, so trades are a
Yeah,
lot cheaper.
yeah. So anyway, I mean, yeah, awesome for them. Great work. And um, I remember leading up to the presidential election, 2024 presidential election, there were a lot of people saying in crypto, but even outside of crypto, once the election's over, these prediction markets, they're not going to have PMF, right? They're not going to be able to continue on. And I think I mean I had questions about that, but this shows you though I think that really it's just going to ramp up more and more and more in terms of prediction markets.
Yeah, I don't
And
think they're actually being used that much still. Most of the markets have very thin liquidity, but you can't deny that everyone's talking about it. And there's now like it's now like within the lexicon. Oh, there's a poly market for that. Check the poly market on like everything. And
yeah.
I think like whoever put this deal together, they're probably that's part of the. I would imagine a big part of why they're just like, look, this thing has such good mind share. It's people want this to happen, and like it's just a no brainer investment.
Yeah, but I think it was at KBW or Singapore. I can't remember which guest told me this, but they were saying like some really cool things are happening on these prediction markets, Polygon. Um, uh, Farmers in Latin America are using prediction markets as a way to hedge against hurricanes, which affect their crops, right?
Yeah,
And they're like legitimately doing that, as in
yeah, that's
because
fascinating.
so you're and the issue was that normal insurance companies or whatever they wouldn't offer this kind of hedging, right? But they can get kind of synthetic or kind of tangential hedging by using polymarket.
Yeah,
So
there's got to be
that's
a
awesome,
million use cases like that. So we're
right?
just barely scratching the surface
Yeah.
of it, right? Yeah.
And this is like a legitimate one that has like revenue, this revenue narrative. The farmers
Mm.
don't care. They don't care about crypto. They don't care about like making money. This is just simply insurance, right?
Yeah.
So they can start a poly market whatever thing bet and say whatever their insurance wants, and then they just put their money in, and that's it. And if people take it, then they get insurance on crop loss due to hurricanes. So I think that's
So
cool.
a novel way to structure insurance.
Yeah, where they couldn't get it before, right? They just
Yeah.
wasn't offered.
All right, David. One last thing before we wrap it up here. Let's see your DGen phone.
Okay, yeah. So I usually don't do this, but I have to say, guys, uh, this is pretty awesome. To the people at Degen, I was impressed with like the uniqueness of it, right? Like I've got other phones and other products from uh, crypto related things. Not gonna bring up anybody or anything like that, but this is like the first one where the second I got it, I was like, oh, nice. It's just different. It's not like the
By the way, David,
usual.
you purchased this with your own money.
Yes, I did about
You
like
didn't
a
get
year
this.
ago.
You weren't given this. So
No, no. This is all mine. All the stuff that I've got, I buy with my massive amounts of crypto winnings. No, but yeah. Like look. So it's like a little briefcase. I mean, dude,
yeah.
come on, a little
What is this thing
originality.
anyway? Open it up. What is it?
I'm opening it up. Little briefcase. I'm gonna give the briefcase to my kids, by the way, too. So it has this. Maybe I shouldn't show this. I don't know if it has any information on it. Anyway, there's like this is what it looks like inside, like this kind of thing here.
Oh,
Again,
leather
very
case.
unique, very unique. It has this. Here's the leather case. I think it's actually like pleather, or what do they call it now? Vegan leather, Graham,
AKA plastic.
aka oil. And yeah, it's in this thing, and there it is. This is it. And
Yeah.
dude, for this kind of
Looks cool.
stuff, it's very very cool because like for me at least, there's no way in hell any of these things, whether it's the Solana phone or this one, it's not going to replace my
Your phone, your normal
my
phone.
really nice phone from a company that's all they do. But as a secondary like crypto phone, hell yeah, I like this a lot more than the other ones I got because at least it's unique. I don't need another phone that looks like a phone. But for me, well, all I was trying to say that I really like, and I hope that companies take note of, is yes, do some design work, like make the unboxing experience this interesting and unique and special. I absolutely love that. So very very cool.
All right, David, have you fired it up yet? Did
I
you get
have.
your Verse airdrop?
I have. I don't know if I want to show anything about it because I don't want to reveal any information, but I have. And everything works well on this phone. Hold on. Oh, does that work? Yes. Yeah. Dude, I am a big fan. I'm an older millennial, so just having this kind of stuff here, like look at that. Oh man, dude. Way cool.
Yeah, I mean, I love the idea of. I would love if this type of thing became more common, more people use this, because we need to find ways to disintermediate the app stores, that duopoly of Google Play and Apple
Yes, absolutely.
needs to happen.
Yeah, 100%. And I think this is the right Trojan horse, which is don't try to replace my Samsung Galaxy Ultra 25,000. You're not going to be able to do that, right? Like there's like
Just
a
target
billion.
the secondary phone market.
Yeah, there's like a billion Koreans designing this phone for me. My Samsung Galaxy phone. Don't. What are you doing? But maybe over time you can get there. So yeah, that would be my advice. Anyway,
All right.
not paid endorsement at all. Just very impressed. And now my kids have an awesome little briefcase that they get to play with. Right, I get to take all this stuff out, and they get to pretend to be, I don't know, business people or something, which is
Yeah,
awesome.
or yeah, like Tom Cruise, like Mission
Yeah.
Impossible.
Yeah. They get to
pretty
walk
cool.
around with it. Yeah, it is.
All right, David. Thanks for sharing that. And yeah, that covers the weekly for this week. Have a great week, everyone. See you